Today, Wall Street and big banks have once again prioritized profit and greed above the safety of your deposits, leaving all of us vulnerable. Hi everyone, thank you for being here. Unfortunately, big news today from CNBC. Federal Reserve unveils toned-down banking regulations in victory for Wall Street. Don't you love that choice of words? Toned down, not ineffective banking regulations or unsafe and risky banking regulations, they're just toned down. So what exactly are these regulations and how do they impact you? Let's get into it. Well, it starts with last year's bank failures. You remember the string of bank failures we had, starting with Silicon Valley Bank, as a result of massive unrealized losses, the same unrealized losses that are still permeating the entire banking industry today? Well, during that time period, it became evident that if banks needed liquidity, it was nearly impossible for them to get it because all of their assets were all tied up in these bad assets, these unrealized losses, where if they had to sell any of their assets, they were selling at a loss. So for once, US regulators came together and had a good idea. They thought, you know what? Maybe these banks should have more capital on hand. It doesn't solve the underlying issue that banks are still playing fast and loose with your deposits and making risky decisions built on a house of cards. We'll get to that later, but it at least ensured that there would be more capital on hand for depositors. So they created a proposal that will revise the rules tied to risk activities, including lending, trading, valuing derivatives, and operational risk. And this was put together by the Federal Reserve, the controller of the currency, and the FDIC. Essentially, the idea behind this was banks would have to understand what type of risk they were involving themselves in, and based on that risk would probably have a higher capital requirement, how much they would have to keep on hand. Now, this obviously was going to impact the largest banks the most, but mid-sized banks between 100 billion and above to 250 billion would also be seriously impacted, and regional banks as well. Basically, on average, banks would have to hold about an additional 19% capital requirements, which, if you ask me, is a good thing. Now, the naysayers, Wall Street and big bank lobbyists, are going to say, oh no, this is going to hurt the economy. It's going to cause a recession because banks won't be able to lend as much. It's going to slow everything down. But the reality is, let us not forget that banks are for-profit institutions. No business out there is going to want to be told that they have to keep a certain amount of their funds in savings when they could be making a profit on said funds. Of course not. It has nothing to do with the greater good. It has nothing to do with keeping depositors safe. It has nothing to do with the economy. It has everything to do with their bottom line. That is the reality, and don't let anyone try and tell you otherwise. And the wildest part about this is what they're proposing is just common sense. It actually made me laugh because this all originated, I know it said it started last year, that's when the current proposal started, but this really began in response to the 2008 Great Financial Crisis. In fact, the BIS, the Bank for International Settlements, often called the central bank of central banks, they're the ones who originally created this outline that said banks internationally should have more capital holdings. Now, I don't agree with a lot of what the BIS does. I know most of you don't either. We know they're out there pulling the strings, but ultimately, this was one thing where it was a good thing. Okay, and I know the reason why, because they don't want the United States banking sector, any banking sector, to take down the entire global financial system, which is what almost happened, of course, in 2008. Because of the derivative exposure. So they said, let's have a little more capital requirement, shall we? And guess what? The United States agreed back then, back in 2010. But it has taken this long to do anything about it. I saw a quote here that said, the journey to improve capital requirements since the global financial crisis has been a long one. Yeah, you think? It's only been 15 years, and it only took another string of bank failures last year for any of this to come together. But of course, this proposal was dead before it even started because big banks, big business, Wall Street, they got together and made sure that this would not pass. So what do we have left? Well, it came out this week that the proposal is going to be resubmitted with changes toned down, again, remember, with a modest 9% increase now. So it's basically just been cut in half. And who knows? That might not be approved either. Maybe in another year, they'll resubmit again, and this time it's 4%. They'll just keep cutting it in half until somehow it's killed entirely. You know, and they're claiming that this is a win for everyone, especially regional banks. It says here that the backpedaling for capital requirements for smaller subset of banks stemmed from the fact that the extra capital wouldn't impact their safety. Do we really need them to go through all this process of creating new systems to comply with the new capital rule when there's no capital impact on how safe they are? No capital impact? Are you kidding me? If banks were crashing tomorrow, if they are failing and going under, who is going to protect your deposits? The FDIC? As a reminder, it has come out that the Federal Deposit Insurance Corporation, the people who are supposed to make sure that your deposits are insured up to $250,000, they only have just over 1% of all total insured deposits in their deposit insurance fund. What does that actually mean? We only need 2% of all total insured deposits to be at banks that are going under, and suddenly there is not enough funds in the fund to cover everyone, to make everyone whole. What happens then? And anyone out there who's going to say it doesn't matter, they'll just be bailed out. It does matter. Are you a taxpayer? Because it matters to me. I did not sign on for all of these executives and for the Wall Street elites to be making profit off of my taxes for their poor decision making. Because I'm not the one who's benefiting from that. They are. You're not either. No. This whole system, unfortunately, is rigged against us. And every now and then someone comes along, they try and do something right to protect the everyman. And unfortunately, big banks, Wall Street, and lobbying, they get in the way. And they kill it before it can even start, which means once again, we're sitting here in a situation today where nothing has been done and your deposits are just at risk as they were yesterday, which is why I feel sometimes like a broken record, but I need to make sure that everyone understands this because they don't want you to understand this. They don't want you to realize that by keeping all of your eggs in one basket in the system, by keeping everything in dollar-denominated assets, by keeping everything in a savings account, you are putting yourself at risk. They don't care because the most powerful people, the wealthiest people, have already diversified. They understand what's coming next, that this is not going to be able to go on forever. They're squeezing everything they can out of it. And eventually, when there's no juice left to squeeze, they'll sail off into the distance. But what are we left? We're left with nothing. And I am so passionate about this because for those of you who don't know, I first got into precious metals because of my background in emergency preparedness. There was a day where I woke up and I realized I can't count on the government for anything. I can't count on them for food, for water, for safety. I can't count that the government has my best interests at heart. In fact, we have seen time and time again, we have seen them prove that they cannot be counted on. That ultimately, at the end of the day, you have to count on yourself and your community that you've built. And that is what led me to realize it doesn't just go for food and for water and for basic health and whatever else, it also goes for the entire financial system. When I started exploring that, that's when I realized, oh, yeah, something that makes sense, like banks holding more capital, is going to get shot down because ultimately the people in power are not doing things to protect you. They are doing things to stuff their own pockets. You probably already know that. I know that. If you don't know that or you have someone in your life who doesn't understand that, share this video with them. We need to get the word out. Because again, ultimately, we all can feel it, that things are changing. And that is why you have to take your power back into your own hands and protect yourself with physical gold and silver. And not just any gold and silver, but gold and silver that make sure that it reflects your goals, your concern, that it's designed to safeguard your wealth, especially in the context of what's coming next. You know, I was talking to someone the other day, someone close to me who's about to retire, and they said, Taylor, this is so important. what I do with my finances because I don't have another chance. I can't afford to mess up. I don't have time. I don't have the luxury of a redo. And I know that is the case for a lot of people. And that is why if you are concerned about any of this, about what is going on, I urge you to talk to someone. Talk to one of our expert analysts who have decades of experience in helping people through these financial crises. With that context in mind, because your average financial advisor, they are not trained to talk to you about these types of things. So if you haven't already, click the Calendly link below. Set up a call today at a time that works for you and talk to a member of our team. And if you haven't already, be sure to subscribe. My goal is to make sure that you understand what's really going on and to help break down complex financial topics so we can learn and grow together, because there is strength in numbers. So as always, thank you so much for being here. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.